Guys, welcome to the course breakdown. So I thought I'd decide to do a tiny little simple 5 minute, 10 minute, 15 minute um, presentation on the course breakdown. Now, the reason why I'm doing this, guys, is because, of course, the course that you have studied and you continue to follow is the strategy and system that we're using here in the RocksFX community. There are slight changes and variations that will be adjusted, amended, and tweaked as we continually grow together as a community. What I'm going to do here now is just talk about a couple of the things that you guys are missing out and a few things that you need to be really zeroing in on. Okay, so let's take a look at the first thing first here. You guys need to learn to keep it simple. Okay, what I'm noticing is that so many of you here in the community are making trading just a little bit too complicated. Now, the course is fairly simple. The training in itself, of course, is going to take a little bit of time. However, understanding the basics and the fundamentals of the course itself will be able to help you understand all the other training material that's available to you. What I need you guys to do is zero in on the course itself, the patterns, just the theory behind it. And once you've got that locked in your brain, everything else will come to you naturally, okay? Now, what I'm noticing, just a few things here, people are using trend lines randomly. They're using things like EMAs, they're using Fibonacci's and so much more. What I need you guys to do is I need you to just go naked, remove everything from your charts. Now, if you're coming into the community, what you should be doing really is using this as an opportunity to start fresh again. From all the losses, from all the hiccups, from all the hurdles that you've been having to face over the last year, 2 years, 6 months, 3 months, whatever, this should be your prime opportunity for you to come in and say, I'm going to come in, I'm going to learn what Rox is teaching, I'm going to follow what the community is doing, and I'm going to start fresh. It should be refreshing. So what I need you to do is remove everything. Let's start fresh. Let's work on the groundwork. And then once we've done that, guys, you can build on it. Now, what I want to look at today is how you're going to set up your charts. We're going to try and understand that what happens in the past will happen in the future. However, if you start to say to yourself, do you know what? I'm going to use Fibonacci's, then I'm going to try and use trend lines, then I'm going to try and use EMAs for confluence. What's going to happen is you're going to just put in too many tools, too many indicators. It's going to cause too much confusion, too much clutter, and you're just going to get false readings on the charts. So what I need you guys to do is stop zooming out on your charts. I need you to focus in on current price action. This is how this strategy works. It's very powerful. It provides many opportunities every single day across many, many instruments, not just Forex. And if you're trying to use the old theory of support resistance, does it work? Absolutely. Would it work for this strategy? Absolutely not. So try and focus on what you're being taught. Focus on current data and don't be afraid to zoom in. All we're trying to figure out is what is happening at this moment in time on this chart so I can get in, get safe, and then either win or lose the trade. So what we'll do, we'll have a look at this, and I'm just going to give you a very quick rundown on this chart to explain to you what I see in the markets, keeping it very simple. At this moment in time, what I'm noticing is we have way too many support and resistance levels. Now, this is what I'm seeing in the charts. Even though this is not what I'm in the chats, this is not what I'm teaching in the course. And when you do something like this, guys, there is way too much information on this page for you to either be focusing on where you're going to enter, what support and resistance is going to work, what is not working. Listen to me. These lines that you're drawing on these charts, you can line them up anywhere. It doesn't take a genius to draw a support and resistance line, and you can just slap a support and resistance line here if you wanted to. As long as you go back far enough, guess what's going to happen? You're going to find data that taps on those levels. So what I need you to do is stop drawing so many lines. You need to work with just 2 lines only. I say maximum 3. And we're going to see an example of that. But look, when you look at this chart now, there's no clear direction. There's no clarity. There's nothing that is working for me, and there's nothing that should technically be working for you if you're learning the strategy that's being taught here. So let's look at the same chart, just on a different page, and let's see the difference. Same chart, just much cleaner. Now, as you notice, what we've done here is we've taken current price action. Instead of zooming out with 3, 4, 5 lines, we've zoomed in, and now we have clarity. Does this mean that we have a buy or sell opportunity at this moment in time? Maybe not. Who cares? That's not what we're here to do. We're not here to look for a trade every single day. We're here to wait patiently for when a trade arises and a setup comes to us, we take the trade. So now, clear direction on this market. We see here, clear consolidation, meaning no trades until price breaks that structure, indicating a sell pressure to the downside, or if it breaks to the upside, buy pressure to the upside. What are we looking for? We're looking for the market to pull back to make a lower high formation to then look for a sell opportunity. Do we care if this happens? No, it happens all the time. What we're waiting for is for price to give us evidence now that we're in a sell buy structure, and all we need is for price to pull back to give us confirmation that price is continuing to fail to the upside alongside the sell pressure, and then look to take sells back to the downside when the opportunity arises. And look at that. Very clean, very sweet, very to the point, very simple. Now, if we look at current market structure, what we're looking for, 2 things. Price to pull back to a major area in the market and push down as a retest, or for price to make a lower high for a continuation. And that's it. Okay? Let's take a look at this one more time. What everybody else is using, what is being taught. What everybody is using, what everybody should be taught. Now, next time you decide to send charts in the chat, make sure you're zoomed in, make sure you're keeping it simple, okay? Now, reading market structure is fairly simple in the way the strategy is taught here in the community. And if you've learned the basics of Forex, then you would know the basics of this strategy. For buys, we're looking for higher highs, higher low structure. Very simple. The sells, we're looking for lower low, lower high structure. Very simple. When we're buying at higher lows. And for sells, we're selling at lower highs. For sideways moving markets, understand this. We are looking for a simple break to the upside or break to the downside and a retest. And if the markets are not clear, guess what? Stay away from them. And that's it, okay? Take this, put it on your wall, dream about it, sing it in the bath, whatever you want to do, just make sure you got this fixed in your head. So let's take a look at this. First and foremost, what we're going to look at is a chart, and I'm just going to give you a breakdown on how I see this market structure, very simply. We was in a consolidated market. Clearly the market is moving sideways. Just use your imagination here that this is a sideways moving market. In a sideways moving market, we are waiting for a break of structure, a retest, then for a sell opportunity. When the market structure is pushing down, we are just looking for price to show an indication that it's failing to break above or create in a lower high formation, and we're looking to sell the market. When price violates and breaks structure, this is now indicating to us that there is bullish pressure in the market, but this does not mean we buy. We are waiting for price to pull back to give the evidence of now, when we're buying, a higher low structure, and we look to buy the market once this is printed. Do we know if we're right? No. But what are we supposed to be doing? Continually executing in a systematic way according to our plan. So if this continued down, who cares? The more often you take trades in a systematic manner, then guess what? Your results are going to turn around positive. There's just no way it can't, because we're using a proven strategy, and it's as simple as that. The market continues to move up, you identify structures, and again, we go through the same process. Market structure was moving up, price is now violated structure, indicating bearish pressure in the market. What are we waiting for? We're waiting for price to pull back to create a lower high formation of the previous structure. Another pattern that we use after we sell or miss the sell is we wait for price to come back to make a double top of the structure. These are very powerful patterns, and you continue to sell the market. Lower high formation. So when looking for sells, we're looking for a lower high formation. And again, lower high formation, And then when price violates structure to indicate bullish pressure, we're waiting for a higher low formation to be formed, because when we're looking for buyers, we're looking for higher low formations. And if we miss this one, then all we're waiting for is for price to break the previous structure to indicate continued bullish pressure, and again, higher low formation by the market. Pretty simple. And this is what I need you guys to follow. Let's move on. When we're looking for buyers, there's two ways you can do this, okay? You can look at structure in this fashion and draw a box to help you identify the high-low formations. This box here is going to indicate an area on the market where price is making new highs. And the way you determine this is you are looking at the structural low in the market, the structural high, and make sure price is breaking the structure to indicate continued bullish pressure. Again, we have a structural high. We have the break of the structural high to indicate continuous bullish pressure. Again, structural high, break of the structural high to indicate continued bullish pressure. And here we have price pushed to the upside, never made a higher low, but we make a double bottom of the previous structure. Please bear this in mind. Very simple analysis on this pair. And all we're looking for is for evidence and then confirmation. You can use the boxes. For me, they're not clean and I don't really personally like using them. So I'll show you what I move on to. A single line. In a sell bias market, we are looking for lower high formation structure to be formed. We have a structural high, we have a push. And the reason why we're not going to focus in on these areas on the market is because what we need to happen first is for the previous low to be broken to make sure that we don't make a double bottom of this structure and go up. So now we have continued sell bearish pressure in the market. We wait for the lower high to be formed. Now for continued sell pressure, we need this structure to be violated for continued sell pressure, the lower high to be formed. Again, we need price action to break this structure to indicate sell pressure and a lower high to be formed. And this is as simple as the system is. Now, there are variations, of course, and patterns that you have available to you. And there are new patterns that I'm going to be sharing with you very soon. Very excited to do this, to share them with you. But for now, we're just going to keep it super simple. So my point is to you, unless you see the market clearly moving up or down, you are not going to be entering the market. Notice on both the buyers and sell structures that I've shown you now, they are clear as day. And the reason why they're clear as day is because this happens in the market every single day. So if you're trying too hard to look for a trade, guess what? There is no trade to be taken. And you must discipline yourself to do that. There's no point wasting your time in looking for a needle in a haystack when you have a packet of needles next to you. I don't even know if that was a good analogy, but the point is, if you can't see it clear as day, then you don't take the trade. Let's move on. This now, I don't know how you guys are going to perceive it, but what I'm noticing in the general chat is you guys are trying too hard. You're trying to sell resistance, you're trying to buy support, you're trying to find out where the retests are, and you're trying to see if it's a consolidation, and then you're focusing too much on price breaking above previous structure and X, Y, and Z and whatever else. Listen to me. Let's clear this. This is not clear market structure. And I'm not saying that to be patronizing, but listen to what I'm telling you. Compared to the other two charts that we've just looked at, this is down, this is up. This is doing a whole heap of madness, which means at this stage in time, please do not trade this chart. We do not need to be the first in for sells or buys, because if we're taking trades based on structure, we expect the market to go up for a period of time. If we expect the market to go down, we expect the market to go down for a period of time. If we're wrong, guess what? It just becomes part of a losing trade or part of the process of our trading plan. And guess what? When we do get into trades, because of our risk to reward ratio, it will end up balancing out for us. So please bear that in mind. Patterns we work with, very simple. They're in the course. Go back and look at them. But the ones that I really want you guys to be focusing on is trend line breaks to indicate a reversal. Once the break has happened, you are now looking for confirmation of price print in a double bottom or a missed double bottom, or a double top or a missed double top. Double bottoms and double tops are extremely powerful to this strategy because we trade based on lower high and higher low formations, which means if price is pulling back to either of those structures and failing to break them, it means that the pressure on that market potentially is still in that direction, which is down, even though it looks like we're pushing up, okay? We're looking for simple higher low structures for continuations and lower highs for continuations. Please bear this in mind. Our friend in the community drew this out, and I am obsessed with this, okay? These are the patterns that we're working with. We're looking for either perfect trend line touches, which in all honesty, I want you guys to let that go. But for now, it's in the course. There's also the perfect break and retest, which means if price breaks a structural high and comes back to retest that structure, we call it resistance turn support. This doesn't happen often, but if it does, it looks perfect. And that's why we called it the perfect break and retest. Then we have price in a sideways moving market. I don't care if it's a consolidation, whether it's a range, it's just moving sideways. This is how we're keeping it simple. We are looking for price to break that structure, retest, go up or go down. If price is trending up or down, we're looking for the break of that trend line to indicate a potential reversal and a lower high formation to be formed or a double top of the previous high. And then finally, we're looking for either a missed double top or a missed double bottom of structure to indicate a reversal and a change in pressure in the market, i.e. sells turn into buyers or buyers turn into sells. And that's it. If you miss a structural lower high or higher low buy or sell, listen to me. What you do is you just wait for the next structure to be broken and the new structure to be formed. This is called patience, okay? Things we need to get rid of, guys, and not work with is trend lines, EMAs, fibs, support, and resistance. Get rid of it, get rid of it, get rid of it. If you come in here to invest a month, 2 months, 3 months, 4 months, a year, whatever it is you're here for, have been here for, plan to be here, listen to me. Keep it naked, get rid of all the clutter. We don't need anything that delays because it's only programming our mind to delay to see things later than everybody else. And we don't want to be part of the majority. We want to make sure that we are on top of what we are doing and we are looking at the markets at the most advanced level possible. Yes, it may not be like me, it may not be like Patrick, it may not be like Z, it may not be like Stubbsy. It doesn't matter. Listen to what I'm telling you. Work on you. And the only way you're going to encourage that growth is just to get rid of what you are trusting in. Start trusting in yourself. Forget the trend lines, EMAs, fib support, resistance, and Bollinger Bands or whatever else you're using. The only thing you're focusing on is this strategy and the cheese man. Okay? And the cheese man is the real deal. It's not a joke anymore. I'm actually starting to realize that this works. But we'll talk about that next month. So that's the presentation. Guys, please just keep it super simple for me. Focus on